Yo, welcome. Thank you guys so much for tuning in to another video. Today is August 29th, 2024, and today's video is going to be a trade recap over the one trade that I took today. So let's get right into it. Alright, so based on how we traded here during London and Asian session, I was able to come up with a narrative that we expanded a ton during Asian session, right? London session and in pre-market session, and with that we had an expansion higher during the pre-market, right? And this move up higher showed me the willingness that we will take out previous day high. So once we took out previous day high without giving me an entry pattern, I moved to the sidelines and I kind of just wanted to watch how prices would trade from there. Either we could, continue higher after previous day high. So we kept, which what I mean by creating, going higher and continue higher is if we continue to create bullish power of three candles. But after we took out previous day high, we did not get those bullish power of three candles, and there wasn't really a scalping model I could have taken within this price range here between this little area. So there is one template, a daily template, where ICT states that if we have a large expansion during the pre-market sessions, that the New York AM session will tend to be, either we will either consolidate or retrace. So like I said, we completed our morning objective, which was previous day high. So I didn't want to take any trades that was too long. Like, I didn't want to hold the trade for too long. I only wanted to be scalp models. So with that in mind, I kind of skipped over the New York AM session, and there wasn't really much of, there wasn't really anything here that I would have taken during the New York AM session. However, the one trade that I did take, however, today was during the New York PM session. So, like I said, we are still consolidating. So, with that in mind, even though prices are in consolidation, you can still take a trade setup if you understand, objective, and you have to just keep that in mind if you're going to enter a trade. That, okay, the trade that I'm going to take now within a consolidative, order flow, when we're in consolidation, I'm not going to be targeting, the weekly open or even previous week's high or whatnot, right? If we're in consolidation, we should only be shooting for lower time frame objectives. So the trade here I took was actually based off of how we closed here on the 15-minute and the 30-minute. So both of these time frames here, they are in alignment with one another, meaning that the 15-minute is suggesting for higher prices and the 30-minute is suggesting for higher prices, and they have the exact same high. So that means the 15-minute high and the 30-minute high are in a line, and we also had SMTs here with the S. So there is SMTs at the lows here with the S, and we had time frame alignment, and we also closed above this 15-minute fair value gap. We closed back above it, so now that fair value gap should be treated as a support level again. So those are already three confluences here that are suggesting me that, hey, we could continue higher here. So on the lower time frames, now I want to try to find an entry pattern to attack the 15-minute high and the 30-minute high. So I would go on to the lower time frames here, the sub 5-minute time frames. So on the 5-minute time frame, we have created a 5-minute fair value gap. So this creation of a 5-minute fair value gap shows me that, hey, on the 5-minute time frame, we're displacing higher. We disrespected this 5-minute inversion fair value gap, or this 5-minute SIBI. So now this 5-minute fair value gap should be treated as a kind of like a support level, a inversion level. However, I didn't take my entries based off of this inversion level or this 5-minute fair value gap. I actually wanted to treat this 5-minute fair value gap as a breakaway gap. So why do you ask? Like, I'm sure you're probably wondering in your head, like, why should this be treated as a breakaway gap? Well, like I said, my objective for this trade is this 15-minute swing high here. So I wanted to see this 15-minute swing high, or this 15-minute high in general get taken. And like I said, this 15-minute high is aligned with the 30-minute high. So let me just note that out for you guys. So I wanted to see prices open up on the next 15-minute candle, create the low, and then take out the 15-minute high. So that's basically all I'm trying to get from the markets, is this move right here. Is essentially that move. And the reason why I'm treating this 5-minute fair value gap as a breakaway gap is because I'm anticipating for prices to retrace into a lower time frame, even sub 5 minutes. So like a 4-minute, a 3-minute, a 2-minute, a 1-minute fair value gap, instead of having to retrace all the way back inside this 5-minute fair value gap. Notice how this 5-minute candle here, this 5-minute candle closed, the body's candle closed above the previous 5-minute candle's high. So notice how this candle, right, closed above the previous candle's high, and we created a 5-minute fair value gap. That suggests to me that, hey, we shouldn't retrace all the way back inside this 5-minute fair value gap and then continue higher. We should leave this 5-minute fair value gap intact, take out the 15-minute and 30-minute swing high first. After we take out the 15-minute and 30-minute swing high, if we want to retrace, then we can retrace. But like I said, majority of my trades or my position would have already been taken out after we take out the 15-minute and 30-minute high. So with that in mind, 5-minute fair value gap, there's, like I said, we're disrespecting a 5-minute SIBI. So we're disrespecting bearish PD arrays when we're bullish. So on the 3-minute time frame or on the 4-minute time frame, is there a fair value gap that I want to enter off of? Well, this 4-minute fair value gap should also be traded as a breakaway gap as well, right? So I can't take my entry off of the 5-minute or 4-minute, because those fair value gaps I'm treating as a breakaway gap with the same idea in mind. Notice how this 4-minute candle closed above the previous candle's high, and we created a gap here. That gap, like I said, should be treated as a breakaway gap. So now I'm going to the lower time frame, so the 3-minute time frame, to look for an entry model. So this is the fair value gap that I chose to take my entry off of. This 3-minute fair value gap right here. And this ended up being my basically my entry pattern, and not my downfall, but I should have applied the same theory too. So I took my entry at the 3-minute fair value gap, right? So the 3-minute fair value gap is now my entry fair value gap. So I take my entry here, and the 15-minute is my 15-minute and 30-minute swing high is my target, and like that. That's my trade necessarily right there, right? The reason why this trade ended up going against me is because I should have traded this 3-minute fair value gap as a breakaway gap as well. What did we do with this candle right here? We closed above the previous 3-minute candle's high. So that means with the very next 3-minute candle, if we're bullish, we should treat this 3-minute fair value gap as a breakaway gap as well, coming to a even lower time frame below the 3-minute time frame. So like the 2-minute, the 1-minute, or 30 or 15 second time frame. Go and retrace back into one of those PD arrays, one of those fair value gaps, and then take out the 15-minute and 30-minute swing high if we're bullish. So that was what I failed to notice, and even though I applied the same theory with the 5-minute and the 4-minute, I I believe the reason why I took this is because I was hasteful. Um, I kind of wanted to force something onto the markets, but I didn't read it as technical as objective as I should have. If I applied that same theory to the 5 minute and 4 minute, I should have applied the same theory to the 3 minute as well, because prices is fractal. That's the reason why I'm able to treat all of these time frames with the same rules in a sense. So on the 1 minute time frame, you can see it a little bit clearer here. But like I said, I take my entry here on that 3 minute fair value gap, and I'm targeting the 15 minute and 30 minute swing, that 15 minute and 30 minute high. So prices opens up at 2 o'clock, and we get a massive candle lower here. This massive candle low. So I instantly get stopped out here, and I mean, I'm fine with this because I mean, it was like the market's telling me, hey, you are completely wrong on the wrong side here. We didn't even get like any sort of like, we didn't, it didn't tickle my my stop loss a little bit. We instantly took it out. So this trade overall was, and I would give this trade an A minus. I feel like this is a setup that I would have taken, like, no matter what, to be honest, because there's time frame alignment. We're disrespecting bearish PD arrays when I believe we're bullish, and objective is super clear in mind, and we're even like coming towards up into a new day opening gap as well. So that could have been a draw as well. So like I said, pretty good model in a sense. The only thing that I could have recognized and done better here was pay more attention to the fair value gap that I'm going to actually enter off of. Because if I had paid more attention to how we closed here on the 3 minute time frame, I would have realized, hey, this 3 minute fair value gap should be treated as a breakaway gap. But like I said, I wanted to be in that trade. I kind of forced the idea that, hey, I'm going to get into this trade no matter what, so I'm going to take this entry with disregarding the fair value gap theory or the breakaway gap theory that I have. But yeah, A minus setup, just could have gone a little bit differently with my entry pattern, but overall, not bad performance. I did take this trade at the gym, so I didn't have the monitors in front of me, but I saw the trade. I simply executed on the model that I saw, and yeah, some of the things that was going into my head was, after going, almost completely all green this month or this week, taking that one loss, it kind of stings me because I'm just like, it wasn't that it was unnecessary, because like I said, I saw the model and I simply executed, but I disregarded that, or it wasn't that I disregarded, but I should have, maybe lowered size or somewhat, because like I said, this here is just chop. It's just consolidation. There's a reason why prices is doing this here, I believe, and I believe we're consolidating because we're about to close here on the monthly candle, and notice the price range that we're within right now. We're within that 0.2 to 0.3 of the monthly candles range. So I do believe that this is probably just going to set us up for the next month. So there's really no need to force anything. There should have been no reason for me to force anything, even during the New York session, because we expanded so much already during the Asian and London session, to where I shouldn't have forced any trades or just lowered my size. And yeah, with that's gonna wrap it up for the trade recap. Overall, A minus setup. I forgot what the title was gonna be for this thing, but it was gonna be like a losing trade where you can learn from, or something like that. But yeah, thank you guys so much for watching, and until next time, peace out. Skadoosh.